Think we're good. Good morning. Let me know, everybody, if you can hear me and see the screen okay. That will help us get started and make sure. Okay, good. I have a really good session for us today. Um, oh my gosh. Big changes in my life, my friends, and let's kick this baby off. Risk warning: all trading involves a substantial risk of loss. Past performance is no guarantee of future results. This presentation is intended to be informational and educational and is not a recommendation to buy or sell any financial instrument. And if you need personal financial advice, please consult a financial advisor. We look for a number of things: magic formula investing, uh, the insider money signals, the bounty spreadsheet, strike zone trades. Over 200 financial instruments eventually make it to our watch list. We look for a very particular counter trend trade on the 4-hour charts. We talked about that yesterday, and a very particular trend trade on the 4-hour or 1-hour charts. We have big trades and small trades. We'll talk about those today. We know our max loss every single time and our profit goal. We manage losses by the numbers and profits by the charts. At least 90 days from expiration are the options that we look for. In May, we want to find and take 5 trades that make $1,000 per $2,000 invested, and find and take one big trade worth $57,000 per $5,000 invested, and learn to trade companies that are entering bankruptcy if we can. We want to trade more bounty companies, focus our learning on how to grow a small account, increase your self-reliance so you can do this on your own. And that's where the May slides are, robbybooker.com/May slides. Okay, why do I have 2 May slides? Bounty spreadsheet, and I have one May 11th. Okay. Yesterday, we talked about getting some help on the bounty spreadsheet to look for stocks that are trading under $1 with bullish Knoxville divergence, 2 bullish profit circles, and volume over 300K. And you delivered. We have CSLT. Thanks, Jeff, and Bngo. Thanks, Alan. We're gonna bump this up to stocks under $5 and maybe even stocks under $10. Okay, folks. And I did not do the research into dark pool trades, but I will continue to look into this block trade indicator business. And we'll talk a little bit about that today and do some research, and we'll just do some reading together. But we're going to focus all of our attention on the bounty spreadsheet this morning and these 2 stocks. And then, to the extent that we have time to get to some other things, we'll look at the FX market and we'll look at current open trades and stuff. So this is the bounty spreadsheet, my friends, and there's a link to it in the slide presentation. Jeff and Alan added 2 more financial instruments to the spreadsheet. And so far, the brand new instruments on the spreadsheet include, let's see here. Oh, Twilio. I didn't look at that, Alan. We'll take a look at that. Twilio, Read, NIOB, FKOL, CSLT, and Bingo. So let's jump over to this. I don't know why Best Buy was on there, but okay. So here's NIOBF. It's got the bullish divergence. It's got 1 bullish profit circle. It's trading for 50 cents a share. We looked at this yesterday, and you can refer to that recording. This is the coal business ETF. Bullish divergence, 3 bullish profit circles. Alliance Resource Partners is a stock trading for $3.40 that actually has bullish divergence and 2 bullish profit circles. And this is in the coal industry as well. And what I thought we might do is look for ARLP, Yahoo Finance, ARLP earnings transcript. 3 days ago. Scroll up here. Maybe do a little bit of reading. And look at Outlook. Maybe switching to the minerals business, what do you think is the kind of long-term outlook? Still have confidence in that segment, core of the core. They're outperforming. They'll outperform the average. This is kind of interesting. United States energy independence. So the word outlook appears once, and it's a good one. Airplay was withdrawn at the initial 2020 operating and financial guidance. Recently announced it would reduce its coal production to match existing contracted sales commitments. According, we're now targeting coal sales and productions this year of 28 and 27, or 25 to 30% lower than originally guided. So remember when we talked yesterday about guidance, and we want to read inside of a transcript. We want to see the words, we want to see optimism about the guidance, and we're not seeing it here. And in fact, when you look at their competitors and you look at other companies, you don't find many that are announcing positive guidance. And here's how you do that. So we're really getting into some super giant league awesome education stuff. You can just go to Yahoo Finance and you can scroll down on this one and you can look at the competitors. Pretty cool, right? It's pretty awesome. Mmlp was once on our list. Look at that. That's kind of a strike zone thing. So let's go to Yahoo Finance and we'll change ARLP to Mmlp. Now, their guidance is going to be a little bit messed up because they provided the guidance in January before a lot of this hit. Looking at our 2020 guidance, we currently expect to maintain the quarterly distribution. We've dedicated to optimizing, continue to focus. Let's see, guidance, 17 words, all right. So then they say we exceeded guidance in 2 areas. And these proceeds are included in our 2020 guidance. We missed guidance on marine, blah, blah, blah. We missed guidance, balance sheet capital in our 2020 guidance released yesterday. She says total debt ratio is shown, moving to capital spending, capital expenditure. Attaches press release, which provides detail by segment, forecasting $117 million of adjusted EBITDA. That's interesting. Sulfur fertilizer guidance, normal planting guidance for sulfur, $3 million cash receipt, marine business reflects, natural gas baseline view. Moving on, anticipate maintenance to be, growth expenditures to be approximately during addressing the refinancing. This is all, it's not negative. And I'll have to, so there's a reduction of some things in a refinery. Corn prices remain strong, supportive to our fertilizer business. It's not bad. This is all reasonably positive. MLP ended up here kind of saying some reasonably positive things. And so they're in the natural resources arena. And I think if you were to, we'll put this on the, we'll put this on the bounty spreadsheet and then I'll just put my name on it. Well, I guess my bounty spreadsheet is really the 57K one. But if you look at it, so we used Yahoo Finance to find a coal stock, ARLP or whatever. And then we looked at their competitors and we found a transcript of a conference call that kind of suggested that this company is doing reasonably well. And it jumped up recently, settled back down kind of like a strike zone trade. So I'm going to go ahead and say, hey, everybody, this is a company that looked or appeared to be doing reasonably well in the midst of some things. And we're going to have to, I think I'd have to, perhaps do a little bit more research into how they're doing since the crisis hit and everything, but it's trading for $2.44 a share. I think you could easily justify a trade here. And I think you could, based on the fact that it's kind of a strike zone pattern and kind of a reasonably optimistic guidance outlook, I think you could say, all right, if you're kind of bullish energy, if you kind of have any view that that could be a sector that you want to be in, so $2.44 a share. Guidance was reasonably positive. Strike zone pattern, cheap stock. after earnings, so we don't have to worry about, earnings coming up. Resting on pivots, which is usually a great place for a bounce. Stop under $2. Target $4.50. This is easily, my friends, this is easily a possible $1,000 trade. Easily. Look, 100% easily a possible trade that gets us $1,000. You buy 1,000 shares for $2,000 and it goes up $1 and you make $1,000. Or it goes up $2. You buy 500 shares. You buy 100 shares and likewise if you buy 100 shares and it goes up $1, you make $100. And you might have a small account. If I had a small account, this would probably easily make it into that small account without question. Okay, so let's do the same thing we just did, but let's look at a couple of additional. Let's look at CSLT. So we'll start with the chart. Jeff put this on our bounty spreadsheet. Look at this, bullish divergence, two bullish profit circles. It's after earnings. They surprised to the downside on earnings. It's not a big deal because it's the crisis, whatever. Castlight Health Incorporated, I found out that they provide technology solutions to Anthem and other healthcare providers to let patients and employers log into a portal and look at their healthcare solutions. Two bullish profit circles, a little bit of a jump after earnings. So let's read the transcript. So this is Mmlp. Just got to make sure here. This is Bngo, and this is Castlight. Okay, so this is Castlight's earnings. And I read through this and I got to, here's what I found. Quote, employer demand for navigation continues to rise. Well, that's good, with the National Business Group on Health's latest report showing blah, blah, blah. We're on track to make this new service generally available and have enabled our field teams. That seems reasonably positive, right? They're basically quoting some statistics. They're not really quoting any contracts, though, right? They're not even saying. And then they say, given our new Anthem relationship does not tie revenue recognition to client launches, and our 2019 sales were light, oops, we do not expect to see the revenue growth sequentially in each quarter. So Castlight actually said, we don't really see. So I looked for outlook and guidance and I just searched for those terms. And then I read the whole thing. I sped read the whole thing. And I came away with this idea that, all right, this company doesn't appear to be predicting a gigantically significant amount of revenue growth. So I'm going to hold off on this one and maybe dig a little deeper as we go. But still the same. It's kind of fun, isn't it? You gotta love what we just did there. Here's Bngo from Allen. Bullish divergence, two bullish profit circles, 46 cents a share. We're after earnings. It's a beautiful, this is a really lovely pattern. Bionanogenomics. So this is a company that does a bunch of research into the genomics, gene stuff. And here we go. So we looked at the conference call. Welcome to it. Fiscal year. Turn the conference call over to your host from at Investor Relations. Press release announcing its financial results. I would like to remind everyone that certain statements will be blah, blah, blah. These forward-looking statements are based on information available today. And here's the CEO. There's some slides to accompany the remarks. A year when our customers took very first steps in expanding their adoption beyond really the halls of academic research. We've been completing a various amount of studies describing performance and blah, blah, blah. Upcoming sample. We're not asking anybody to stop doing blah, blah, blah. 7 slides, sequencer, slide B. And it's not really talking about. So you go through here and he's just telling you about the business. Wait a minute. We saw tremendous progress over the course of the year, and we're thrilled. The validations that are currently underway on our, okay, this is good. but is it revenue? And so this approach provides a revenue stream, but importantly, it makes sure that anyone seeking to utilize the data will be able to get it no matter what. Crucial time to shorten because it accelerates the path. Okay, Q&A. Wait a minute. So is it more of a shift to blah, 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 and how's that going to impact? So with the first question, I think the impact is felt on the revenue. So what we would have brought in revenues tied to a capital purchase, but that's not the case. Mix of deals. We will begin to settle out our approach to make it available, accelerate the time, and utilize chips and academic research. You mentioned Mayo Clinic, and I'm like, So what do we have here if we type in revenue? Revenues are spread out over time. Full year 10 million. That was a record for us. Shows that the growth in the installed base is starting to drive. Okay, tremendous progress over the course of the year. I like it. I like it. I think we are looking at a company that is talking about revenue. Small company talking about some revenue growth. This looks like the kind of company that we're getting. I think we're getting some validation here. I think we have some validation for looking at a buy on this company because at least there's some positivity. Now it's really, really small stock, right? It's just incredibly small. It's just crazy. It's a $10 million a year company, totally overvalued. Average volume is 4 million shares. 19 days ago, Zacks upgraded it to a buy. Friends, I think this goes on the list. I think this goes on the list of things that we could definitely trade. I don't think there's any question that this is 1,000% of justifiable. Absolutely. I think you go ahead and you throw down a trade on this bad boy and you don't feel bad about it at all. There's some positivity in the transcript. There's some optimism in the transcript. There's some talk of revenue in the transcript. So I'm going to duplicate the slide. Ngo bought 1,000 shares at, I don't know. What do we get here? I don't know, 45 cents. 45.87. Guidance was reasonably positive. It's a cheap stock, so we can all get into it. It's after earnings. Did rest on the monthly pivot. Upward. Stop under 30 cents. Target. Well, we have a target at 80 cents that's pretty obvious. It's a monthly pivot if you look at it. I mean, let's not ask this stock to do too much for us, right? A monthly pivot around 70 cents, excuse me. And then we've got a monthly pivot at $1.97. So targets at 70 and 197. So that's a combination of technicals that we like, and then a little bit of transcript work here. And we're diving a little deeper. And so remember when we talked a while back about all this Michael Burry stuff, reading the 10 Qs and the 10 Ks and diving into stuff. Well, I kind of, I took it to heart, and because I can read pretty quickly, and I think we're pushing the boundaries. We're getting more specific. We're learning more about what works. So there we go. If you want to continue on the bounty spreadsheet, stocks under $10, bullish Knoxville divergence, 2 bullish profit circles, volume is more than 300K. And then what we'll do in the morning is we'll take a look at the charts and the earnings together. And I'll do some research ahead of time. This is Twilio. Whoa, like holy moly. Twilio really took off. So why did Twilio take off? So if we just type in Yahoo Finance, Twilio earnings transcript. Did they have earnings on Let's see when they had them. Is this the right one? No, that's the quarter four conference call on February 7th. So we could just go to Twilio earnings transcript. Should be right on there. Let's see if we can pull this up. Let's see if we can get it. If we can't, then we'll, period ending March 31st, May 6th. Okay. Now let me discuss guidance. While we continue to see strength, the macroeconomic remains dynamic. We feel it best to employ prudence in our guidance. As such, we're withdrawing guidance for the full year. We're providing guidance for the second quarter. Expect revenue of 365, including growth of 30%, net increase in usage. So expect a second quarter operating loss. They said that even the travel and ride sharing businesses, which are a big part of their revenue, average less than 10% of their revenue over the last several quarters. So it's pretty good. Let's see if we can do word outlook. Let's see if we can do the word revenue. Negatively impact, discuss guidance. So, it's reasonably positive. It's reasonably positive. Kind of mixed there, right? They're seeing some growth, which is good. So you want to see growth. That's why the stock jumped, obviously. So that's why the stock jumped up. I'll consider it. I got to put your name in this spreadsheet here. So let's jump on over and remember who put Mark. Alan S. Okay. So Alan S. will put your name here. I'll consider Twilio, and then we will go from there. Let's look at a couple other things that have been on my mind. Uber. I'm still super bearish on Uber. That's not going to change anytime soon. I'm still long Resi from $6 a share. If this thing pops, it's pretty great. Look at this though. It's after earnings, bearish, bullish divergence, two bullish profit circles. Guess what I want to do? I want to look at the transcript. So let's take a look here. I don't know if you guys like doing this, if this is fun or if this is boring or hard to follow or whatever, but it's kind of guidance. Here we go. So items are not related. Cash payment in our original guidance, we assumed 35 million cash payment for a total of blah, 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 which is deducted. This change will be reflected. Not providing guidance, just curious how we should think about capital expenditures this year and maybe your ability to flex it down. Good question. So when this happened in the business units, so a bit more clarity. We're just kind of operating on necessary, blah, 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 capital expenditures. Okay. We pulled guidance. Most companies pull guidance because the future is just so opaque as to when the states will open up. So the good news is their customers aren't canceling projects. That's good. I'm liking what I see here. Outlook. Given the rapidly evolving operating conditions, we withdrew our full 2020 outlook. We're unable to accurately estimate the impact of COVID-19. We'll continue to express closely monitor. A few minutes discuss liquidity and capital structure. Defer payments due to Honeywell. This includes 35. So they deferred some payments. We're in compliance with our debt covenants, in line with expectations. Near term, rapidly, we will continue to actively manage our business, cost reduction, liquidity, make great progress. We've seen some opportunities to accelerate certain cost and liquidity actions. It's important not to lose sight of the longer term. We've made great progress on several new product fronts. This is interesting. We look forward to providing more detail in the near future. Remains a company with established global scale. I like it. I like it. They withdrew guidance, but they expressed first of all that they're reducing expenditures pretty well. The projects that their customers are working on that uses their technology were not fully canceled, and they're seeing some great progress. I like it. So there was a reason that I liked this stock in the first place, and it was that insiders were buying this stock. That's the reason I got into this in the first place. I think $6.65 is a 100% slam dunk. This monthly missed pivot down here, 100%. So I'm not opposed on a stock like this, where we've done a little bit of research. I'm not opposed to buying more of it. Insider buying, a reasonably positive given the circumstances conference call, bullish divergence, two bullish profit circles. What else? What else do you want? Overstock is just a lightning bolt. Wayfair, just a savage trend. I'm going to keep my eye on those because those are not profitable businesses. Montage Resources, kind of a heavily indebted company that I considered maybe shorting. Really had some trouble finding any way to short it, so I'm going to delete that from the list. This is AMCX. This is AMC Networks. It's a magic formula investing name that we could look at if there is another bullish profit circle. This is EAF. It's after earnings. We looked at this one. I'm long this stock a bit. I don't know why Best Buy made it on the list. I'm going to delete it. And MMLP, which has some positive earnings resting on the pivot, a strike zone pattern, and even some insider buying. So a lot of really good stuff to look at there. I don't know how interesting all of that was to you all, but it is to me. I think we this was a lot of fun, and it gave us some trades. We could just look at some comments. Really interesting. Some money managers scan those conference calls. One has CVEO and GCI. So, Sue, to withdraw guidance means that the company, so generally, Sue, not every company does it, but every public company is expected when they report earnings to get on the phone and say, this is how the business is doing. And going forward, this is how we think the business will do. And why would they do that? Because their competitors could be on the line, right? Well, the reason they do it is because the people on the phone own the company. The shareholders own the company and have a right to know what the outlook is for the business. So imagine if you invested in a coffee shop and you went down to the coffee shop and they gave you the numbers and they said, well, last quarter coffee sales were up and expenditures were down and traffic in the store was up and the average sale was this much. And you said, well, what would you expect sales to be going forward over the next 3 months as we anticipate? We want to maybe build a new sign out front and whatever else. You want to know, are those expenses justified, or should I increase my investment in the coffee shop? And the guy goes, listen, I'm going to be honest with you. I have no idea how well the business is going to do. And you're like, what? You would be a little bit offended if the person hadn't done any kind of research but if they said, okay, listen, there's a new Walmart getting opened across the street and there's Wendy's going up and blah blah blah, and so we expect that and we have a restaurant's has just put an order in to buy beans in bulk from us, so we're roasting more beans, and That means we need to spend some more money to buy them. See, Sue, that's guidance. That's like, here's how we think the business is doing. What you want to see, Sue, is you want to see a company that's like, based on these contracts and these developments, we're expecting growth, because companies that grow and produce more revenue distribute earnings to their shareholders in the form of dividends. And if they don't pay out a dividend, the company just is an attractive investment because it produces money. Okay, I hope that answered your question. Tell me if it does. Yeah, so withdrawing guidance is we we have no idea how we're going to do next quarter. What it really means, Sue, is we're not going to tell you. That's what it means, right? That's what it really means. Um, of course they know. Of course they do. But they don't want to tell you. So, um, okay. I want to do a little research. Folks, this is a really cool website that I subscribed to it. I don't think you need to. It's like Get Stock Ideas Market Pro Index Market Movers. And it gives me this really cool list of stocks that are moving. It's kind of fun. I don't really know what the use of it is, but I like to know what's moving the most. It's kind of been kind of a fun way to do things. So dark pool indicator. So I didn't do anything. I just read conference call transcripts today. I didn't do anything else. So what I want to do is there's a couple of websites that came up. This one is real time option order flow algo, institutional level order flow for the retail trader, intermarket sweep orders, big orders that sweep all the trades off, options block trades, dark pool prints. Shine light on the dark pool. Let's see what it says. Dark pools are private exchanges designed to conceal institutional trading activity from the public, as well as from high-frequency trading algorithms. Flow Algo alerts you when it spots activity in the dark pool, providing you the order data for each order. Dark pool order data is commonly referred to as dark pool prints. Dark pool prints can be used as key markers to help gauge direction. Flow Algo alerts you when it spots large blocks in the lit or dark markets. So the lit markets are the public markets. The data hits your dashboard as it becomes available. So let's look at this. Utilizing dark pool data. Bullish above the prints, bearish below the prints. Are they buying or selling? The answer is both. For every seller, there's a buyer, and vice versa, so that doesn't necessarily matter. What does is the price action and behavior that follows after the transaction happens. Makes sense to me. The purple line on the charts below indicates the price level where the prints or dark pool transactions took place. Dark pool prints are best used as an indicator alongside technicals and other data, and they are only one part of the picture. Okay, so let's say I'm convinced. Select a plan. Test run Flow Algo over 2 full weeks for just $37. Equity blocks, dark pool order data, dark pool insights. What's the difference here? Oh, monthly, quarterly, annual. Oh, okay. Okay, so that's one place that people get that in dark pool indicators. That's one place. Dark pool secrets. That's Stephanie Cameron. Squeeze metrics. Let's look at this. Squeeze me. Documentation. Adding your watch list. The dark index. EPI. Adding to your watch list. What is squeeze me? See the dark index. What the heck is this? Over a third of stock volume trades in the dark. Most of this volume trades at the midpoint. making dark pools pre and post trade data notoriously tricky to interpret. Dark pools are private stock exchanges. They're dark because their liquidity is not displayed to the investing public. It doesn't naturally show us if someone is buying or selling. Kind of suggests that maybe Flow Algo is tricking us into thinking they know. We could figure out the direction of the trade by counting up how many dark trades were short sales. And by analyzing dark pool short volume, we find out where there's a potential imbalance in supply and demand. Now, this seems more legit to me, lighting up the dark. We've spent years collecting the data, using the data. We blah, blah, blah. So before you make any, find out if you're on the right side. Get a 72-hour pass for $14. Let's look at the plans. 72-hour pass, $14. Dark pool indicator, research page, one-time charge. Portfolio alerts, 15 sticker portfolio, 72-hour live interactive charts, broad coverage. This looks interesting. So maybe we'll put this on the list that by tomorrow if I can. I like this one better, but I'll try both, okay? So what we'll do is I'll do a trial of Flow Algo, and I'll do a trial of, I want to call it Squeeze Me. So we'll try a dark pool. We'll try it. We'll just take a look at it, right? It can't hurt to, give it a little bit of a look-see. So we definitely want to look at Mmlp, and what's the other one that we bought today? Bngo. I think Bngo is on my watch list. I think I put Bngo on my watch list. Oh, look at that. Bngo's up a bit. It's kind of nice. Kind of nice to be on the right side of a trade. Bngo Bango. I actually put this on my watch list because my friend says Bngo Bango all the time. Okay, did we have a good time, everybody? Was this helpful? Are we doing stuff that pushes the are we doing stuff that pushes the envelope on our knowledge? Are we I think we're doing a better job here, aren't we? I think this is what we're doing here. I think this is going to lead to better trades as well. I get the feeling that at certain times when we've taken a trade, not having the full fundamental picture hampered us, and we were kind of flying blind every once in a while. Except for the volatility trades. I think we definitely know what we're doing there, and those aren't interesting right now at all. Okay, to sum it up, I like Resi. The earnings wasn't bad, and it's definitely the counter trend trade pattern that we look for. Bullish divergence, 2 bullish profit circles. It just cannot be denied. Martin Midstream Partners, natural resources kind of company, bullish divergence, 1 bullish profit circle, strike zone pattern, low priced stock, resting on the pivot targets above, and an earnings call that was pretty good. And Bngo Bango, bullish divergence, 2 bullish profit circles, a reasonably okay earnings call. And it's overbought, so let's just be careful here. But things can stay overbought for quite some time, and we can deal with that. Okay, folks, going to end the recording and make sure I send that out right away.